Hello everyone, this is Connor with housewing.com here. Had a quick discussion planned for today. So essentially what we're seeing is I was looking at a ton of different articles online, and a lot of the things that we've been seeing is that, or other people, right, the data that's been recorded is that these Midwestern markets are still the ones that have slowed down the least despite rates and prices. And of course there's slight exceptions like, really small areas in like certain markets, but on general, right, we're looking at a big picture here. And these Midwestern markets seem to be kind of leading the charge here because, and they're saying it's because good, solid job market. So a solid job market combined with affordability is really what's bringing a lot of these people in. And from what I've been reading online, it sounds like a lot of it's from out of state too, where people are starting to, everything's getting more expensive. They're like, okay, where can our money take us like farther? And, we still have a good job market, good job opportunities. I think it's where a lot of people are moving there. Let me know what you think, what's driving it. With some of the areas that in the Midwest that we're talking about is like central Ohio, like Akron, northern Ohio, like Cleveland, Fort Worth, Indiana. I saw Pittsburgh on there. I even saw Detroit on there as well, which is already right a pretty big city, but it looks like they're starting to gain some momentum there. And let me know what you think, once, if let's say the market, if it starts to pick back up, if they lower rates, will these areas start to slow down slightly to where they are? Because right now these areas are winning, it sounds like, because they're the most affordable options with the job, right? With the solid job market. But if everywhere else in the country gets more affordable because of rates, does that mean people start to look at other options besides these markets? Because right, the big appeal of these markets is affordability. That's what people like in the job market. But if other markets start to get more affordable, it brings more competition to these Midwestern markets. Will we start to see these Midwestern markets, not being labeled as the hottest markets right now? Let me know what you think. And by hottest market, right, as we're talking about, it's not generally off of like, total sales volume. It's more about like the speed of which people are, buying in these areas. Like, so essentially their values have been impacted significantly less in these Midwestern markets because people are considering more affordable options. And it looks like from what I was reading too, is investors are too. A lot of investors are going to these Midwestern markets because it's cheaper per unit, right? You can get a 4-unit building a lot more affordably than you could in like Los Angeles. And I guess, a lot of what I'm reading is, I'm guessing that also kind of involves like individual investors too, because if you're an individual, you work full time, you're trying to figure out affordable, real estate markets to put your money. Institutional investors, I'm guessing they're not going to be as impacted by, the prices and rates just because they have larger reserves, but maybe they would. Maybe they're looking at more Midwestern markets. But let me know what you think. What's kind of driving this interest towards these Midwestern markets, even from investors to just people looking to, move, raise a family, or even retire.